Ladies and gentlemen, good day and welcome to Escorts Limited 4Q FY22 results conference call hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mayur Malak from Asian Market Securities Limited. Thank you, and over to you, sir.
Hi, thank you. Good evening. And on behalf of Asian Market Securities Private Limited, I welcome you all. I also take this opportunity to welcome the management team from Escorts Limited. Today we have with us Mr. Bharat Madan, President Finance and Group CFO and Corporate Head, Mr. Shenu Agarwal, President Agri Machinery and Construction Equipment Business, and the Investor Relation team at Escorts Limited. We will start the call with a brief opening remarks from the management, followed by an interactive Q&A session. Before we start, I would like to add that some of the statements that we make in today's call will be forward-looking in nature and are subject to risk as outlined in the annual reports and investor releases of the company. At this point, I would request Mr. Madan to make his opening remarks. Over to you, sir.
Thank you, Mayur. Good evening, everyone, and thank you all for joining us on this earnings call for the fourth quarter and financial year ended 31st March 2022. I would like to present few highlights of company standalone performance for FY22 as follows. Turnover at rupees 7,152.7 crore against rupees 6,929.3 crore in previous year is up by 3.2%. Tractor volumes at 94,228 tractors as against 106,741 tractors previous year. Construction equipment volume at 4,117 machines is up by 5.2% as against 3,913 machines last year same quarter. EBITDA at rupees 951.3 crore as against rupees 1,129.2 crore in previous year is down by 15.8%. EBITDA margin now stands at 13.3% as against 16.3% in last year. Margins have been adversely impacted by steep inflation in commodity prices as well as lower sales volume in agri machinery segment. Company continues to be debt-free with sufficient available liquidity for growth. The PBT at 1,000.9 crore as against 1,157.1 crore last year. Net profit at 765.6 crore as against 874.1 crore last year. Standalone EPS at 58.9 rupees per share as against 68.1 rupees per share last year. The Board of Directors have recommended a final dividend at 70%, that is rupees 7 per equity share for the year ended 31st March 2022, as against normal dividend at 50%, that is rupees 5 per equity share for the year ended 31st March 2021. This is excluding one-time Platinum Jubilee year special dividend of 25%, which was declared last year. Moving on to company's quarterly performance, turnover at rupees 1,861.4 crore as against rupees 2,210.5 crores in previous fiscal same quarter. Tractor volumes down by 32.8%, 1,895 tractors as against 32,588 tractors in last year corresponding quarter. Construction volume down by 19.8% to 1,286 machines as against 1,604 machines in last year corresponding quarter. EBITDA at rupees 243.4 crores as against rupees 344.7 crores in last year corresponding quarter. Net profit for quarter at rupees 202.2 crore as against rupees 271.3 crore in last year corresponding quarter. On consolidated basis, revenue from operation at 7,238.5 crores in the year ended March 2022 was up by 3.2% as against 7,012 crores, 12.5 crores in the year ended March 2021. Consolidated net profit recorded at rupees 735.6 crores in the year ended March 2022 as against a profit of 872.6 crores in corresponding period last year. Consolidated EPS stands at rupees 74.06 as against rupees 92.15 per share in previous year. Now moving on to segmental business performance, starting with the agri machinery business. Domestic tractor industry volumes in FY22 went down by 6.4% to 8.42 lakh tractors as compared to 8.99 lakh tractors in previous fiscal. You may recall that FY21 was a record year with a growth of 27%. Even with a 6.4% drop over the peak of FY21, the tractor industry in FY22 recorded its second highest peak. While tractor industry remained subdued in second half of FY22, the recent trends are pointing to building up of positive sentiments. This is owing to good crop prices and prediction of a normal monsoon. April 22 witnessed a 41% growth in industry, and we expect Q1 of the ongoing year to be quite positive. We would hold full year's inventory guidance until after the onset of this monsoon season. Our domestic volume went down by 14.5% at 87,043 tractors in FY22, as against 101,848 tractors in previous fiscal. Severe inflation pressures in the entire year led us to take 5 price hikes in 6 quarters, including recent price hike taken in mid-April 2022. Most of these price hikes were taken ahead of competition to balance our profitability and volume goals. Tractor market share improved from 10.1% to 11.8% between FY16 and FY19. For the next 2 years, it had a marginal decline to 11.3% in FY21, owing to various supply chain issues in the peak COVID era inhibiting our ability to meet the demand. In FY22, we declined further by 1% as industry in our strong markets like UP, which degrew at 15%, and Bihar, which degrew at 20%, did not do well as compared to some of our weaker markets such as Maharashtra, which grew by 20%, and Karnataka, which grew by 5%, and AP and Gujarat, which degrew at 3 and 4% respectively, lower than the industry average degrowth. Q4 to FY22 market share sequentially has grown to 11.4% as against 10.4% in Q3. Also, we hope the inflationary pressures to subside from Q3 onwards. After a massive steel and oil-led inflation in Q4 of FY22, the commodity prices are more stable, at least for the time being. On tractor export side, industry was up in FY22 by 45.2% to ever highest 1.28 lakh tractors as compared to 88,000 tractors in previous fiscal. Our export volumes went up by 46.8% to 7,185 tractors as against 4,893 tractors in the previous fiscal. This is driven by continued success of new product launched by us in the last few years as well as by our expanding distribution network. EBIT margin for agri machinery business stands at 15.5% as against 18.3%, adversely impacted by steep inflation in commodity prices and lower volume. Post the recent price hike in April 2022, we still have significant unabsorbed inflation. We plan to take one more price hike in Q2 of this year and then hope to recover the entire impact of inflation by end of the ongoing year. Coming to the construction equipment business, our served industry of cranes, backhoe loaders and compactors was down by 23% in volume as compared to FY21. Only crane industry showed marginal growth of 1.8%, but compactor industry was down by 11.6% and the backhoe loaders were down by 28.2%. Our total volume of manufactured and traded products went up by 5.2% to 4,117 machines as against 3,913 machines in the previous fiscal. Segment revenue for the year at 985.3 crores was up by 27% as against 776.1 crores in previous fiscal. We increased market share in FY22 in all key product segments. However, due to steep price inflation and lag effect in passing on the same to the market, our construction equipment business EBIT margin was at 2.4%, down by 116 basis points in the previous fiscal. With renewed government thrust on infrastructure and enhanced budgetary layout, we expect good recovery in construction business starting Q2 of the current year. Now coming to the railway division, revenue for the year ended March 2022 went up by 32.8% to our ever highest yearly revenue of 636.2 crores as against 479 crores in the corresponding quarter. Sales from new products now contribute 65% to the total division sales as against 59% last year. EBIT margin for the year ended March 22 stood at 14.8% as against 16% in the previous year. We are witnessing good traction in tendering process, and order book for the division at end of March 22 stood at more than 440 crores. For FY23, we expect railway equipment segment to continue to grow in the double digit. Post successful closure of the open offer on 11th April 2022, Kubota Corporation has become joint promoter of the company. Joint teams have started working together in various functions to bring together best practices from both the companies, and also started working together on developing a mid-term business plan for the company, which will be shortly renamed as Escorts Kubota Limited. The plan is likely to be ready by third quarter of this fiscal year, outlining roadmap to achieving joint aspirations and associated investment strategy. Now I request the moderator to kindly open the floor for Q&A session.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Hitesh Goyal from CLSA. Please go ahead.
Thank you. Thank you for taking my question, sir. My two questions are: one, you alluded to the fact that RM.
Request you to please unmute and proceed.
Yeah, hi. Can you hear me?
Yes.
Can you hear me? Yeah.
Yes.
So my question, there are two questions. First is on the RM inflation front. What is the under recovery still in 1Q on the RM side, and how much price increase have we taken given the current spot prices of steel? And secondly, on the railway business, we are seeing last 2 quarters the revenue has jumped up, but margins are still declined from 2Q levels. So, you had guided for 17-18% kind of EBIT levels on railways. So what is the under recovery there, and when will we reach those 17-18% EBIT margins?
Okay. Hi, Hitesh. This is Shenu. So I'll answer the first question on the raw material inflation. So I'm speaking about like the tractor side. So after the end of this quarter, after having taken one price increase in mid-April, we would still have about 4 to 5% of unabsorbed inflation of the sales price, average sales price. So this is although going to be a challenge, but as Bharat said, we are planning to take one more price increase in Q2, and then subsequently we will see how to time the balance price increases. Of course, it would be too optimistic to hope for any deflation right now, but at least we are seeing some stability in the raw material commodity prices in the last few weeks. So that is the situation on RM inflation and prices. The most recent price increase that we have taken is roughly 2%. And I'll pass on to Bharat to answer the question on railway.
Yeah, it is. I think the railway margin front, there are two key reasons. As I mentioned, so the new product contribution has been going up now in that segment, and which is large dependence on imports for meeting the demand. And the exchange rate has not been very supportive. So both because the margins as it is are low in that segment, in the new product segment, they're giving very good top line growth to us. And second, because of this currency issues. And third, because these are all fixed price contracts, because we got a large order book now from railways, but these are all fixed price contracts, so the inflation cannot be passed on to the government. So that's another challenge which is coming now on the railway front. So even though we carry a good order book now, the tendering which has started now, so the new orders which are coming probably will factor in the cost increases, but the one which are existing on the books, so that obviously will have some impact on the margin because of the inflation. So that will have some impact overall, I think, this year also, on the railway margin front. So which I think will probably be more in the range of 13-14% now, at least for this year, till the time we are able to really get to the new orders, which are with the built-in of cost increases, which has already happened.
Okay. Thank you. Thank you, guys.
Thank you. The next question is from the line of Raghu Nandan from MK Global. Please go ahead.
Thank you, sir, for the opportunity. My first question is to Shenu, sir. Sir, farmers seem to be benefiting from both higher crop prices and additional crop as Rabi harvest was early this time. Can you talk about farmer sentiments and income improvement? Can industry growth be 20% plus for Q1 FY23?
Yeah, Raghu, thank you for the question. Yeah, farmer sentiment is quite positive, more so in the wheat growing parts of the country right now, because as you know, most of the wheat is being sold in mandi at market prices and not at the government MSP price. The market price, although it varies from mandi to mandi and state to state, but is quite a bit higher than what the MSP is. So in MP, for example, it is ranging between 2,300 to 2,600 rupees, and in Rajasthan, in some places, it is even going up to about 3,000 rupees. Right. So that is one good aspect. The other thing that we have to keep in mind that while in many areas the yield of the wheat is good, but in some areas, especially in the Haryana belt, the yield has not been so good. Right. We have seen because of high temperatures and early summer onset, the yields have affected. But yes, overall, the situation is good in terms of let us say farmer income per acre, etc. So after having seen a 41% increase in the industry, although some of it is also because of some pushing the dealer stock, yeah, it is quite fair to say that we can see something between 15 to 20% growth in Q1.
Thank you, sir. Shenu, sir, can you also speak on the efforts at your end to regain market share towards 11-12%? Your thoughts on marketing efforts, new product, network expansion?
Yeah. So Raghu, as we have always maintained that we have a very clear strategy that is in place for last 3 to 4 years. And this strategy has basically 2 or 3 parts to it. So the first part is that wherever our market shares are more than, let us say, 13-14% or more than the average market share, which we call our strong markets, there we are trying to marginally increase or sustain our market share. The second is like what we call the weak markets or the opportunity markets, where our market shares have been traditionally very, very low, either slightly above 5 or even below 5. There we are running several special projects to increase our penetration. Now, of course, most of these projects have a long-term, medium-term horizon, but yeah, I mean, but we are very, very consistent in our approach to these. Now, last couple of years have been a little bit kind of jittery for us because of this unusual, unprecedented inflation pressures, and we had to every quarter we had to think, how much price to be increased and how much hit on the profit to be taken. So we were kind of balancing our act between our profits and between the market share or the volume aspiration. But I think now is the time because we really think that this situation has now, I mean, this era is now probably going to be over sooner than later. So we are going back to now fully focus on the market side again. The strategy is not going to change. Even this year, we are following the same strategy, but we have renewed our efforts now in those projects. So, for example, right now for this year, we'll be running at least 4 or 5 projects in the weak markets and also 2 or 3 projects in the strong markets where we have lost some market share. But overall strategy remains the same. So we are expanding our dual distribution, which means separate dealers for PowerTrack and FarmTrack. We are enhancing our reach by improving our channel coverage in white spaces, and we are also launching products wherever we have white spaces or opportunity to improve the current product range.
Thank you, sir, for the comprehensive answer. Just a clarification there. Would Kubota products get sold in our wide and strong network, or would Kubota continue to be in a separate channel?
So Raghu, that deliberation is going on. As Bharat said, we are in the process of creating our midterm business plan. And this midterm business plan would cover all these aspects, like what is going to be our joint brand strategy now going forward, what is going to be our channel strategy, not just in domestic, but even overseas markets, what is going to be our strategy in enhancing our efforts on the implements, attachment side, etc. Right. So please be a little bit more patient on this. Hopefully by end of Q2 or early Q3, maybe we should be ready by all the plans. A lot of detailed plans are being worked out along with the investment plans also. So we would be able to answer to these questions around that time.
Thank you, Shenu sir. One last query to Bharat sir. Sir, we have huge cash reserves. Any plan on utilization or reward to shareholders in form of dividend, buyback, anything that can be expected? Or would you want to share this during that midterm plan?
Yeah, Raghu, I think we're all waiting for a midterm business plan, but that will also, give us a roadmap of how much investment is needed, organically for the business going forward. So depending on whether we're setting up a greenfield plant or going for further product portfolio expansion or getting to the new ranges, I think all those clarity will come maybe at that time. So I think it'll be too early right now for us to really say anything on that front. But out of the preferential allotment which we did, so the entire money which has come from quota actually has a restricted use, so that can't be used for dividend. So what really will be available will be whatever surplus we were carrying prior to this preferential allotment or whatever will get generated in the future, which will be the kitty which will be available to us for distribution or for buyback or whatever other allocation strategy can get formed in this plan. So I think we'll come back to you. I think once the plan is ready, we also intend to announce it to the investors at large, what is the roadmap for the company. So maybe wait for a few months more.
Thank you, sir. Wishing you all the best.
Thank you. The next question is from the line of Gunjan Prithyani from Bank of America. Please go ahead.
Yeah, hi. Thanks for taking my questions. I have two follow-ups. Firstly, just the earlier question on the market share. Now, if I look at the market share, we've been losing even in our strong markets in North as well as East. What I'm trying to understand is it just the price action that you all have taken is much higher than the competition, or is there something else? You seeing aggression from other players. I mean, what is it really going on in your stronger markets? From market share perspective.
Yeah, Gunjan, thank you for the question. Yeah, see, partly, on the surface, it looks like price is the reason. Because most of the price hikes we have taken ahead of competition by a few days or weeks or even months. But what has happened in this process is in some of the markets, stronger markets, our positioning got upset. Our price positioning, product positioning got upset because of this phenomenon. So we don't think there is anything fundamentally wrong. We are not losing any dealers. There is no big problems with the product. And there is nothing like competition has done, which is unusual in these markets, right? We really think it's a temporary phenomena. Of course, when in such a scenario, our responsibility is not just to ourselves, but to also to take care of the entire ecosystem. Because when we do 5 price hikes in 6 quarters, of course, it creates an impact on dealer profitability. When the inflation is so high, it creates an impact on supplier profitability. So, we had to balance a lot of things. I'm not commenting what the competition did, but we know our story best. But we had to balance a lot of things. We had to balance dealer profitability, our own volume, market share aspiration, our own profit, our suppliers, cash flows, etc. So it has been a difficult time, right? And like I said, we think things would be stable now going forward, and therefore we are refocusing on our market share aspiration
now. Ms. Kunjan, is the question answered? Just joined you back.
Hello?
Yeah, maybe she dropped. Gunjan,
yeah,
could you hear me?
Yeah,
taking her back.
Sorry, yeah, sorry. Sorry, I got dropped. No, I'll just take my second question, which was on this, the price on the farm segment. If I look at the ASPs quarter-on-quarter, they have come off. Now, you did indicate a lot of price increases that have been taken along the way. So, what really explains that the price reduction? And in a similar, I don't know, maybe if I missed while I got dropped, are there any discount schemes that are being floated in the market just to, kind of bring the demand back?
Nothing unusual. Of course, from season to season, we vary our discounts a bit, but nothing unusual right now. Of course, if the market comes back and if the inflation subsides, there would be a higher competitive intensity in the market because everybody would now start gunning for market volume and share. But nothing we have witnessed so far of this sort.
And ASP, sir?
What was your question on ASP? I couldn't get it. So you say
the ASP sequentially has come off despite you taking price hike in Jan or in quarter 4. What explains that reduction sequentially?
I'm not sure if ASP has come down. Do you have any specific data that you are referring to?
Yeah, I'm referring to the farm segment ASPs. Maybe I'll take it up offline. It's fine.
Yeah, that would be better. Yeah. Thank you.
Thank you.
Thank you. Before we take the next question, I'd like to remind the participant to limit a question to 2 per participant. If time permits, you may join the queue for any follow-up. We have the next question from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. Question on the April month strong volumes which we saw for the industry. Any sense on how was the retail side trend? I mean, wholesale, as you indicated, there has also been inventory push which is happening. Any sense on the retail growth for month of April?
Yeah, so there was quite a bit of growth in retail also in April. We don't share retail numbers even at the TMA level, etc. So it is like more of an internal estimate. But yeah, there was a solid growth in retail as well. However, the wholesale growth seems to be more than the retail growth in April. But yes, retail also improved quite a lot.
Sure. And what kind of price hike we took in fourth quarter, primarily in January-March quarter?
I'll just respond to that in a minute. You said Jan quarter, right?
Right.
Yeah, my colleague is looking at it. I'll just respond in a minute.
Okay. And a question to Bharat. With respect to the cost inflation, what was the gross RM cost inflation witnessed in fourth quarter?
In the fourth quarter?
Right.
In the fourth quarter, I think on the RM side will be close to 2%. But we pass on the cost increases to the suppliers with a lag of a quarter. Normally the contracts are issued at a lag of a quarter. So what actually got passed on in Q4 was more, I think, Q3 inflation.
Right.
Q4 has seen steep inflation, which really will have impact going forward, which will get passed on next quarter.
So Dinesh, on the price in the fourth quarter, we actually took a price increase on 1st December, which continued, of course, through the fourth quarter, and that was roughly between 2 and 2.5%.
Got it. And lastly, if you can talk about the exports, how are we progressing on leveraging on Kubota's channel through eKubota brand and beyond Kubota's channel for how should we look at exports from FY23 basis? Thanks.
We are very, very optimistic on that front because you know that Kubota is a multinational brand and they have a very, very strong distribution network in many parts of the world. So definitely we are going to leverage that. Also, as part of our joint partnership, we have already notified that we are going to come up with a new product range consisting of maybe some existing aggregates and some new. but this will be like basic machinery, not basic from India standpoint, but basic from a world standpoint, like a basic value innovative machinery, both farm machinery and construction, that we will create and then export through or sell through Kubota overseas channel. So very optimistic, but yeah, a lot of planning is being done right now to take it to another level. Right now, as you know, like a year or year and a half ago, we started some volume to export through Kubota channel. But now, since this partnership has taken another form and shape, it will go to a very different level now. So all that planning is in works. As soon as we have our MTBP plans ready, then we'll share a lot of details with you.
Sure. And of the 7,200 exports in FY22, how much would have been through Kubota channel?
Oh, very, very small number. Less than 1,000, but in a minute I'll give you the exact number as well.
Okay. Thanks. I'll fall back into you.
Thank you. The next question is from the line of Mitul Shah from Reliance Securities. Please go ahead.
Sir, thank you for the opportunity. Sir, I have question on tractor volumes for FY23 again. I know that it's difficult to give number, but directionally, if you can help, whether it will grow, it will remain flat, or maybe decline on a wholesale basis.
Yeah, generally, Mitul, hi. Generally, the direction or the thought process right now is that it should be on a growth path again after having dropped 6% last year. We are quite optimistic about the first half, especially the first quarter. Now, as Bharat said in his opening comments, we would try to hold back our guidance for the whole year until the onset of the monsoon. And also watch some other macroeconomic situations that are happening, such as inflation and the war and other things. So, I mean, there has been a lot of uncertainty and volatility in various macro parameters of late, and therefore we are just hesitant to make a full year prediction right now. So give us a few more months and we'll come with that prediction. But yes, first half looks very positive.
So basically, I'm asking from wholesale point of view, is the inventory level in the system roughly around 135, 140,000, which is much higher than what we have witnessed in historical average of 85, 90,000. So even if you adjust, the inventory may remain slightly elevated at close to 100 or 110K. Still there needs to be 30, 35,000 correction required in wholesale. So what I am trying to understand, even if industry retail will grow by say 5-6%, wholesale may not grow. So what is your thought on this inventory side correction as well as on the retail side from that point of view?
Yeah, you are right that the stock levels, dealer stocks levels are higher than normal right now, and your numbers are pretty okay in the range. Yeah, there would be some correction that might happen after the season on the dealer stock, but until then, I don't see any correction happening really. Yeah, even right now, every manufacturer is gunning for full production, hoping for a bumper season in May, June, and even later festive season. So yeah, let us see how it pans out. I mean, but as I said, in the first half, the things are very optimistic, and everybody is going to go for the best retail numbers ever.
So second question on this sustainability of April number, that what we are hearing from the few farmers as well as from few dealers, that because of the export of food grain going up and there is a kind of fear in the minds of private procurement companies that in future, because export going up, there would be lesser availability of this food grain. So they are purchasing at higher prices, as you pointed out rightly, for wheat as against 1900 MSP per quintal, roughly 2400, 2500 is at most of the places. So it is coming out that primarily because of the Russia-Ukraine thing. Once it gets settled down, the prices, mandi prices may come down. So how confident are you about the sustainability of this such a high growth which we have witnessed in month of April? Even in that month, roughly, I think 12,000, 12,500 is the inventory push. Retail growth was roughly 25-27% only. So your view on this for coming months?
Yeah. So Mithul, you are right. We are not at all expecting a repeat of April phenomena throughout the year. April growth was 41%, and of course, as you rightly said, retail growth was not that high, but still very, very strong. You are right. This wheat thing is a temporary phenomena which will affect the first 4 or 5 months of tractor industry, and after that, then we have to wait to see how the monsoon is, how the sowing is. But I think, the Navaratras are also in September this year, right? And therefore, and we are expecting some early sowing as well in some parts of the country, right? So all in all, it seems like the first 6 months have all the positivity around it. Because this rural cash flow, actually some of the farmers are even holding their crops. Some of the customers are, because they are receiving money from the mandis and not from the government, so they have a staggered cash flow also, right? So every customer is not getting on spot money. They are, some money they get right now, some money they get a month later, some money they get even 2 months later. So, considering all these factors and a few more, we are optimistic about the first 6 months. Again, to your point that there may be a stock reduction at the dealership level, but again, like since the Navaratras are in September, we don't see happening that in first 6 months. In fact, in first 6 months, stocks may go up slightly more than what they are right now, right before the Navaratras.
Yes, sir. Thank you for the detailed explanation. Sir, lastly, anything would you like to share on the non-agri tractor side?
On the
non-agri tractor usage or tractor for non-agri purpose, also growth seems to be strong on that side.
Yeah, Mithul, that is also one area which is bringing some optimism in our industry. Because as you know that for last 2 years, whether it is non-agri or even to some extent government-backed sales, is not really healthy, right? Even some states which have a high share of market in non-agri, like Bihar, for example, they are not doing well even now, right? Because of the slow momentum in the non-agri side. Now, what we see now is that this has to change. The COVID possibly is kind of mild. A lot of spend has been committed by the government in the budget. A lot of outlay is there on construction. So we really think that this will take a kick off this year. Now, exactly when, it's hard to say, but still, my personal belief is after Q2, we should see some improvement in non-agri side also. So that will also help the industry and help Escorts.
Thank you very much, sir.
Thank you. The next question is from the line of Vikram R from MIB Securities. Please go ahead.
Yeah, thank you, sir. My question is on the supply side.
Vikram, request you to use the handset, so you're not audible clearly.
Oh.
Yeah.
Yeah, yes, sir. Is it better now?
Yes, this is better.
Thank you. So my question is on the supply side. 2-3 quarters back, we had an issue with supplies which was fixed, especially on the injection pump. And now we see most of the other auto industries are again facing issues with chips and basically the semiconductor shortage. Anything that you would like to comment, and is there a pending order book due to this?
Yeah, Vikram. You are right. We had a terrible situation on the FIPs in the tractor market because of dependency on one company on FIPs for the entire industry. And that was largely related to COVID-related lockdowns, right? So while the rural demand was still going high, but supply chain got disrupted because of COVID, and specifically this company had a lot of issues. But we are over that problem. Of course, there were some learnings also. So we have improved our inventory carrying capacity. for some of the critical items such as these or some other items which were in risk at that point in time. Chips necessarily don't affect our industry too much, at least until the stage 5 norms come up in 2024. So right now, chips is not a problem. Yeah, in some export-led products, chips is a problem, but not as much as the other players in automotive industry are facing. So like even in the export models, we use chips per tractor kind of a thing, while automotives and cars, etc., use a lot many more. So yeah, so that way we have no problem on supply chain. But yes, supply chain has been very, very erratic for last 2-3 years, and even now. And the main reason is this whole disruption because of unprecedented inflation. So in this era of inflation, a lot of suppliers face difficulties of cash flow and profits and all that, and we have to really hold their hand in such times. But that also brings a lot of volatility and uncertainty in the supply chain. Even today, we have a huge backlog of export orders, not because of chips, not because of FIPs, just because of the uncertainty in the supplies on the supplier side.
Thank you, sir. My second question is on the southern markets. Now, because of our relationship with Kubota, do you foresee our presence in southern market to improve because Kubota is slightly stronger than us in the southern side of the country?
Yeah, that would definitely be a strength that Kubota will add to the company because their products are more suited for the wetland. They have, like historically for many, many decades, they are very good on the wetland kind of products. So that is a strength that, of course, comes to the company now, that technology, that know-how, that knowledge of the market, customer, etc. And on the back of that strength, we are going to have a different plan how to grow in South now. Of course, as I said, detailed working is going on for every market, for every state, for every product segment. And we will be ready with that by end of Q2 or early Q3.
So just a final question, because you mentioned about the rising commodity costs. Because of general uncertainty around the energy availability and costs, any chance there is a clamor or push to move towards electric tractors or e-tractors or EV in case of tractors?
Yeah, huge push, at least in Escorts. Our chairman, Nikhil Nanda, is personally very, very passionate about the alternative technologies and about their impact on the environment, etc. So you know that we were the first company to launch a commercially viable electric tractor in the country and probably in the world as well. We have been ramping up the supply and production of the electric tractors now. We have already reached to a level of about 60 to 70 a month, and very soon we will try to cross 100 a month as well. We are by design kind of taking it slowly because we want to mature this technology more and more before we start pumping up big numbers in the market. A lot of work has to be done by us, both on the technology side and the cost of ownership side. So that work is on. But yes, there is a huge focus, at least in Escorts, on alternative technologies, including electric tractors.
Thank you, sir. That's it from my side.
Thank you. Before we take the next question, I'd like to remind the participant to limit their question to 2 per participant. If time permits, you may join the queue for follow-up. The next question is on the line of Kapil Singh from Nomura. Please go ahead.
Good evening, sir. Thanks for the opportunity. I just have a follow-up on the commodity cost related answer that you gave. You mentioned that you've taken a 2% price increase in mid-April and another 4 to 5% cost increase needs to be passed on. So I just wanted to clarify, this 4 to 5% is to maintain the current Q4 margins, or it is to achieve a certain target margin?
So when I say 4 to 5%, it is on a cumulative basis since this inflation trend started in roughly in Q3 of FY20. right? So this is like cumulative impact of last 6 or 7 quarters that we are at right now. We are still 4 to 5% short when we see the difference between inflation, what we have given to suppliers, and the price increase that we have been able to command from the market. It is on a cumulative basis as of today.
Okay. And how much cost inflation should we expect in the current quarter ending June?
Fingers crossed, but as I said, last few weeks we have seen some stability in the commodity prices. So there is like roughly no impact. Some of the prices have gone down, some have gone up slightly, but in a very narrow range. So I mean, these days it's hard to say what would happen in inflation, but right now we are thinking that this quarter probably the prices would be stable.
Okay, great. And secondly, I just wanted to check for what is the update on TREM 4 norms for less than 50 HP tractors? When are they going to be applicable, and what is the cost impact of that?
Yeah, so there is no formal notification from the government yet. But yeah, the date that has been discussed, that has been under discussion with the government is April 1, 2024. The government in its various discussions has also said that they would have a minimum difference of 3 years between more than 50 and less than 50 HP tractors. Now, since more than 50 has already been postponed again to October 1 this year, so I mean the industry does not think that it will really happen in April 2024. It may get extended further as well. But yeah, I mean it will happen sometime in that time frame, 2024, 2025. The impact on the cost would be quite significant. It would be, let us say, roughly like more than 1 lakh of rupees on the selling price, or even more in some higher HP models. So that is going to be a kind of challenge for the industry when it comes. But yes, all the companies in the sector are trying to find different ways, either to reduce the cost or to add some other value in the tractor to justify that kind of a hike. So we are still like minimum 2 years away, maybe 2.5 years away. So a lot of time we have on the hand to see how we can justify this to the customer.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, request you to limit a question to 1 per participant. Time permits, you may join the queue for any follow-up. The next question is from the line of Chirag Shah from Edelweiss. Please go ahead.
Yeah, thanks for the opportunity. Sir, I just have a follow-up on the earlier question. So this TREM 3, you indicated 100,000 rupees price increase in TREM 4, right?
I'm sorry, your voice is not very clear.
Sir, you indicated 100,000 rupees cost increase in TREM 4.
No, stage 5 I said.
Stage 5. And what about stage?
Which would be coming in 2024 or 2025.
And for the 50 HP tractor which is get implemented, which is likely coming in October, what about that, sir?
Oh, see, firstly, like that market is not really big. That market is roughly 8 to 9% of the total market. Yeah, and the cost increase would be not that much also. Cost increase would be roughly in the range of 50 to 60,000 rupees. And the prices of these tractors also is higher, much higher than the average price. So the impact would not be that much from the pricing point also.
So one takes follow-up on
stage 5 norms. The ones on 50 greater than 50 HP are stage 4 norms, and therefore we don't need to add too much equipment to manage the emissions.
Yeah. And sir, lastly on this commodity price deflation, which most of the industry is expecting to happen from H2. So in the past, would it be right to say that a good amount of this commodity deflation is actually passed on to the consumer or to the end user?
Deflation is better.
Sorry, can you repeat that? I'm really sorry. Can you repeat?
Sir, the commodity deflation which is expected from H2, at least hoped, like to put it across like that, in the past, we have seen that whenever there is a commodity deflation, it is passed on to the consumer. Is it the right way of looking at the industry dynamics, whether the demand is strong or not, to maintain the brand equity, you tend to pass on the benefits?
We don't know. It's like if I give you any answer, it will be very hypothetical right now. So we will see when it comes. I mean, we are not saying that we are not saying that we are seeing any deflation right now, right? We are just saying that we are looking at some stability in the commodity prices. Yeah, when this changes to a deflation scenario or whether it changes or not is very, very hard to say right now. Yeah, but I mean, if there is a deflation scenario, I think the response of the industry would be a mixed one. Some amount would be passed on, and then some would be adjusted in the potential price increase that we had to do in any case, right? So I think it will be a mixture of the two.
Okay. Thank you very much, and all the best.
Thank you. The next question is from the line of Abhinav Chandak from Ratnabali Capital. Please go ahead.
Yeah, hi, thanks for the opportunity. My question is on the merger. So where exactly is the merger pending right now? How long will it take? And post-merger, I have a follow-up on that. So Escorts has been losing market share, whereas we see Kubota has been gaining market share. Both Escorts and Kubota put together, market share is going to be close to 14%. Post-merger, what is your take? Do you see your market share continuing to grow? Because Kubota has been eating market share in the small size segment, whereas our sales mix today in the small size is close to 40-60. Where do you see this sales mix? What are the margins in the small HP tractors? And what exactly is going to happen post the merger of both the entities?
So we know I'll answer the first question on the merger, then we'll pass it on to Shenu for your second question. So on the merger front, right now, as you know, so the open offer got concluded only in April last month. So right now we're in the process of doing some formalities. So we still need to go to the board for approval. But initially what we declared in November when we signed the agreement was an intent to evaluate the feasibility of merger. But now we are fairly closer to that, and we need to work out on the process and the both valuations, swap ratios, and the timelines, etc. How it will happen. So those things are in process right now. So maybe soon you will hear probably from us, on that front, on the next step. But obviously this is a process which will be a court process, which will take at least a year's time. But this will have to go through the stock exchanges, SEBI for approval, then shareholders approval, and then NCLT. So, but yes, the process internally hasn't started. So let's see. We're trying to do it as early as possible.
Okay. So in the last call, when the merger thing was asked, we were told that the dilution for the existing shareholders is going to be minuscule. You still stand by that?
Sorry, what did you say?
The dilution on the merger for the existing shareholder, we were told is going to be minuscule in the last call. So you still stand by that?
They're small in size, so they're not really. First, the manufacturing JV is only captive for the sales company, so it's really not really much value there. And both put together are not very large companies compared to Escorts, so that's why we thought the dilution should not be much. But obviously it will depend on what value the values come out with. But definitely we don't think it's going to be very, very significant.
Okay.
Yeah, and coming to your question on the tractor categories and market share, etc. So see, I mean, from our view at least, we think Kubota and Escorts brands are very complementary, and I'll tell you why. Because if you look at Kubota current portfolio, they are very strong in the very small HP tractors like the Orchard tractors, and they are very strong or getting more stronger in the larger tractors like 50 HP or more. While most of the Escorts strength lies in the mid-range, which is like 35 to 50 HP. So I think from that point of view, it is very, very complementary. The other thing is even geographically, we are very complementary. As you know, we are more stronger in the west, in the north and the center, and Kubota is more stronger in the west and the south. In fact, they are not even present in many markets in the north and center. So that's another reason we think very complementary. Technology-wise, also very, very unique because Kubota having a background of rice, their tractors are much more lighter. and better suited for wetland applications. While our tractors are much more heavier duty, they have more weight, and they are much better for dry land applications. So I think, if we are able to successfully kind of leverage the unique strengths of Kubota and our brands just in terms of geography, technology, or product range, I think we would have a good winning combination. Now we are working on these aspects, like how to create this winning combination. You are right. Our combined market share is roughly 14%, and we have a stated aspiration of a joint market share. So we are just seeing how to get there in what time frame.
Thank you. The next question is from the line of Rohit Sharma from Motilal Oswal Securities. Please go ahead.
Actually, sir, there is only a simple question from my side. First of all, congratulations for the stupendous result. Just a question is that our average sales realization in quarter 4 has increased in the tractor segment. When I see out in the tractor segment, the quarter 4 Escorts tractor realization has increased by around 28,000, whereas the selling price we have taken is only 10,000, roughly 10,000. So is there a positive mix impact that is coming into the play for the tractor segment?
But this 10,000 price increase is actually taken in April. So the last quarter will see the impact of price increase taken in the earlier period too, which is I think what is coming up besides the product mix gap which are there. These are.
Hello. Sorry, ladies and gentlemen, it seems we have lost the line for the management. We'll request all participants to please stay connected while we reconnect them. Ladies and gentlemen, thank you for your patience. We have the line for the management reconnected. Over to you, sir.
Yeah, sorry, I think Rohit, so I was responding to your question. So obviously the price increase of 10,000, what you talked about is taken actually in April, so not in Q4. So Q4 impactfully more than the price increase which was taken in that quarter or the prior quarter. So yes, there is some positive mix impact too, which is there. And third is also there's a non-tractor revenue. So it's not total revenue coming from just tractors. There's a non-tractor revenue also, which is roughly 10% of the total, top line, which normally happen like parts or oil, etc. So which is also part of the total agri business segment. So it's not pure tractor per se, which will have this impact.
Yeah, so that is what, sir, I roughly worked out dividing by number of tractors. So 594 to 622 is moving out. So you're saying non-tractor segment is also contributing towards that revenue?
Yeah, that also is seeing the increase happening. So both on the implement front, the engine sale which happens there, so there's a spare part and oil, lubricant which gets sold. So they're also part of the total top line. So it's not pure tractors at play.
And you have to also consider that the price hike we took was on 1st December. So that price hike had no effect in Q3, but the full effect in Q4, right? So when you compare Q3 and Q4, then you have to account for that as well.
Yes. Okay. Thank you.
Thank you. The next question is in the line of Ishit Sheth from Anvil Wealth Management. Please go ahead.
Hi, sir. Thank you for taking my question. Sir, I had one question. When we've seen generally, a merger of entities or a global, parent, global promoter taking over an Indian company, because of, their style of working and manufacturing, the processes and all of that, there's sometimes an impact of, taking an inventory or write-off, in the company. So you think something of this sort is possible as both companies come together?
So it's very difficult to answer that question, Ishit. So I think we have done all cleanup, so all legacy issues for this company have been sorted out, and you've been seeing that happening in the last number of years now. So that's why the performance has been on the increase, year after year. So, but yes, like you said, since we are in the process of working on a midterm business plan, there may be decisions taken on what product portfolio to continue. There may be some hard calls which may need to be taken depending on the synergies which may exist in the longer term. So short term and mid term, there may be issues which may come up, but we don't see really, as of now, we don't have any visibility. So it will be very hypothetical for us to really say and comment on that. But we don't rule out. There may be cases where, because of the longer term synergy, you may have to take certain calls.
Thank you. Next question is from the line of Sajid John from Geojit Financial Services. Please go ahead.
Hello, sir. Most of my question has been answered. I just want to ask you on the export front, sir. Would you like to give, because on a full year basis, the exports was good. So any ballpark number would you like to give for the next 2 years?
Yeah. So as we explained that there has been a momentum in the exports industry firstly, right? I mean, in exports industry shot up quite a bit in FY22, and there are reasons behind that, right? We think those reasons are not just short term; those reasons are like mid term, and therefore, firstly, there will be a momentum in the export industry that will continue. So that will provide us some tailwinds to our own volumes. The other is, we have a lot of opportunities coming up with Kubota's partnership. So our aspiration is very, very high. We want to be the leading exporter of tractors among all the Indian players. That would take us about 7 to 8 years to reach at that level. But yeah, you can imagine that year by year what kind of a growth we would need if we were to reach there. So definitely, I mean, the short-term goal is to cross the 10,000 tractor volume immediately, like within a year and a half or so.
Thank you. Next question is from the line of Abhinav Chandak from Ratnabali Capital. Please go ahead.
Yeah, so this is a follow-up on my previous question. I had even asked for margins on these small tractors. So if you could just quantify which segment lower than 40 HP has higher margin compared to tractors above 40 HP? What exactly is the dynamic there?
Yeah, it's a little kind of technical to explain this point, but like in all automotive industries or including tractors, when we design a particular tractor, it is not designed for a particular HP point. It is designed for a range. So for example, if I create a new transmission or a new gearbox, I wouldn't design it for absolute 40 HP. I will design it for a range, let us say 38 to 43 HP. Right? So once I design that, and so on the tractors which are 38 HP, because they command lower price, I make less money. But on the tractors 43 HP, I command more money, although the cost of the tractor is roughly the same. Right? So that is why we have this platform theory in automotive. So there are like three, let us say, platforms which are most prevalent in tractor industry. One is 38 to 42. The other is 42 to 47, and the third is like 48 to 55. So of course, the margin goes up as we go up higher in the HP category, and the margin again goes up when we go higher in the within the platform also. Right? That is a normal trend in the tractor industry. So you can safely assume that the margins are better as when HP is going up.
Thank you. Ladies and gentlemen, due to paucity of time, that would be our last question for today. I now hand the conference over to the management for their closing comments. Thank you, and over to you.
Thank you, ladies and gentlemen, for being present on this call. For any feedback and/or queries, please feel free to write into us at investorrelation@escorts.co.in. Thank you very much, and have a good evening.
Thank you very much. Mr. Malak, would you like to add any?
Sure. So on behalf of Asian Market Securities, this concludes the conference. Thank you all for joining. You may now disconnect the lines. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Asian Market Securities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.